Yeah. So today's session is more about reviewing your progress so far over the past 2 months and also refining your personal trading system, addressing any blind spots, and also preparing you for solo precision trading or moving to advanced mentorship. So it's just more of just making sure that everything you've learned, you basically know how to like put into practice and also know how to manage your risk and everything. So far, would you say there's any, even if it's just one single thing, is there any one specific thing you say that is still, even if a little bit of a challenge for you?
Um, well, one of the things,
Yep.
I think just I'm still working on the smaller time frames, but I'm getting better at it. Like that I really like that London fair value gap thing.
Yeah.
Like for the last week, basically since you tried it, since you showed it to me, and I think I've lost one, but I think I won most of my trades that I took on that. And it's easy. I just do the 2 to 1, and that's good. Probably I'm uncomfortable with um doing counter trend trading
Yeah.
simply because I used to be addicted to shorting.
Yeah.
And you know it changed in my brain and in not a good way. So I was always looking for the wrong, like, just like you said, the market will give you anything you want to see. And
Yeah.
so if I've had like an issue where I've been in blow up account mode, that's been it. And so I really am kind of like hesitant to like trade counter trends because um I just don't want to awaken that beast again.
Yeah.
So basically I would rather sit out and like enjoy the day than trade counter trend.
Yeah.
Um and I think I'm better that to just kind of wait and get myself in the mode to like have a deep retracement and trade bullish for most things, unless it's like a short thing like USD CAD.
Yeah.
I'd rather wait for the deep retracement now because that's where you make a better you make the multiple wins, and it's just easier. So if there's anything, it's kind of like um yeah, I kind of like have an aversion to trading the counter trend.
Yeah.
Um I still am trying to, like, initially when I forgot, but journaling helped me realize um I need to look for resistance liquidity for a stop loss, but I've been looking for that. And I also made and I can give this to you too, but I made a flow chart like that is like a one-page document.
Yeah.
I'm still working on it, just so I have something that where I like to, follow the plan, because I want to make sure I'm like following the steps. That helps me with my being calm, and just even if it's something's going against me or whatever, it keeps me on track.
Yeah.
So I just have this at my desk on on and so I have it in a little notebook so I
Yeah.
can make sure I'm not skipping steps. So um what else? I'm struggling a little bit with my journaling, but that's not really because I don't want to do it. It's just that this journal that I was using is kind of a heavy Excel file, but I feel like I'm in a good place. I feel like what I need to do is keep going, even though I'm not super fast. I'm not in a trade every day. I don't see a trade every day,
Yeah.
but keep going through the steps, keep adhering to the risk
Yeah.
parameters, and keep trying to be like, I think the thing I need to work on is if it goes below, like, let's say I got in a 4 hour and it goes below my entry price. I think probably instead of freaking out that I'm in a drawdown, what I need to do is look for that entry at the better price. So I would say that is something that's going to help me out of my problems from the past. You know what I mean?
Yeah.
So just getting in that mindset, oh, now I can take a lower entry, a lower risk entry.
Yeah.
So
Okay. Yeah.
yeah. because it's hard to get a perfect entry. I've always put that on myself, like where and it's a stressor that's really, I'm not even in control of it. You take an entry and then the expectation that it's going to go right from your entry,
Yeah.
that's not realistic.
No,
and and I just need to get kind of get out of that mindset and um out into the, oh, this is a new opportunity.
yeah.
Yeah.
All right, awesome. Yeah, so far you're doing absolutely phenomenal. I must commend. And these are some of the things we're still gonna work on for the next month. So I usually like to frame the program in a way where we're tackling your challenges, so we're not just going and talking about random stuff. So, and yeah, being hesitant to counter trend, that's a good way to be. It's
Uh,
a good way to be like being very hesitant because every counter trend opportunity is low probability.
mhm,
But at the same time, there will come a time when you're not going to see a pro trend.
mhm,
That is the reason why we're still going to have to work on it, work on your confidence so you can have specific criteria you're looking for before you can take that trade. And instead of using three time frames to the left, we can reduce it a little bit more to like maybe one time frame to the left. For example, let's say you wanted to take a trade, a counter trend trade from a 1 hour, from a 4 hour fair value gap, and it's a counter.
mhm,
Now, instead of us going straight down to 15 minutes to wait for the break of structure, because this is 4 hour fair value gap, now we can just wait for like 30 minutes or 1 hour break of structure. If you don't see that, you don't trade it. Because when you're waiting for 30 minutes, 1 hour break of structure, it's going to make it at least a little bit of a higher probability. And
mhm,
another thing is also if you're taking the counter trend opportunity, if it's from, let's say if you're counter trending for buys, you could be looking to counter trend from a discount or extreme discount zone. So that way it will be, if it's from an extreme discount zone, that basically means that if it fails, it's going to run the low and invalidate the entire trade. So it will have a little bit higher probability than just randomly taking counter trend from random areas. But we'll work on that and then also waiting for deep retracement as well. Now, not every trade will retrace deeply. There's going to
mhm,
be trades that will just retrace a little bit and then continue lower. Like I don't know if you can see my charts.
mhm,
All right. So now, for example, let's say you're bearish on DXY and you wanted to
mhm,
flatten it. You can see that right here, this was the first move to the downside. It broke structure here. And after breaking this structure, it had a very deep retracement, which is awesome. It would have given you a good risk to reward. And after that, this one wasn't really deep. It wasn't shallow. It was just in between. It was just average. But after that, we had this huge drop. And this is a very shallow retracement. And it literally just passed the fair value gap. The very first fair value gap there, and then displaced to the downside. Now, if you were waiting to see a deep retracement, you will see you would have missed this trade.
mhm.
That's why you always need to have it at the back of your mind that we're not trying to predict the market. All we're
Okay.
doing is flow. We just want to flow like the river, like the ocean, like when you're in a canoe or a boat. You don't want to try to go against the wave. You want to flow. So, and how we flow is you go to a higher time frame, maybe let's say weekly, and look at that same point of interest. And on the weekly, you can see that there's just one fair value gap. So all you do is you mark that one fair value gap you can see on the weekly. You don't know whether it's going to go in deep retracement or whether it's going to go into the 50% or extreme. You don't know. All you do is just wait for the mitigation and wait for a 1 hour break of structure and take your trade. And if we take this now to 1 hour time frame, now if we go to 1 hour time frame, you can see that on 1 hour time frame, we came in there right here. We came in there, we created a low, we created a high, and then we eventually broke that structure down here. This wasn't a break because it was a run on liquidity. Right here was the low. And here as well was where we broke structure. This is a complex break of structure. You can see eventually broke structure and closed below. And after that, we came back and retested. So this would have been your entry. You could have used here as your entry, stop loss, few pips above here, and you take your trade. Boom. So it's not always all the time that price will give you those deep retracements. So
Mhm.
just try as much as possible not to predict, because that is one way traders actually get it wrong. Sometimes there are traders that are actually profitable traders, but because they are always trying to predict what price will do, now you miss a lot of good trades. And but we'll go through this in depth. We'll go through it in depth with multiple examples, and also high resistance liquidity as well for stop losses, and low resistance liquidity for take profits as well. Basically, every single time, for example, whether it's pro trend, counter trend, every single time the market delivered a move, you will notice that there's always a run on liquidity, break of structure. Example here, we created this is the run on liquidity. We rallied, we took liquidity from here, and we broke structure here. This entire zone is your high resistance liquidity. So all we're anticipating is for price to come and use this as resistance and keep going lower. And can you see how many times we kept tapped into it? One, two, three. And each time we tapped into it, we went straight to the downside. Every
Mm.
so this area now becomes your distribution zone, area where we're selling. So anything bringing price here, we're just looking for confluences, whether it's a fair value gap or something, or run on liquidity, and then continuation. Now, this is on the fourth. It's still the same thing if we're looking at it on the lower time frame, whether it's 5 minutes, 15 minutes, all of the above. We'll still go deep down into it on different time frames where you see high resistance liquidity. So you can know how to use them both on higher time frame, lower time frame.